So, very warm welcome to all you wonderful viewers of Universal Mentors Association. Panel number three coming up. A huge panel in terms of the discussion where we are talking about the future of neo normal and digital payments. India being only the second highest, I think, in terms of digital payments after China, becomes a really important topic to discuss to all you wonderful viewers and towards the industry as well, that how and what is in store, in the future for the digital payments sector. We have stalwarts of the banking sector present here today talking about this important topic. We have with us our moderator, Mr. Sunil Kumar, who's the Chief Compliance Officer of Federal Bank. A huge shout out to you, sir. Mr. Murli Vaidyanathan, who's the President and Country Head for Branch Banking, Liabilities, Products, and Wealth from Equita Small Finance Bank. A huge shout out to you too, sir. And last but not the least, Mr. Rushikant Shastri, who's the Vice President of State Bank of India. From the oldest bank of the country. A huge shout out to you, sir. Welcome. And this, how important it has become, especially during the pandemic. Uh, the only thing that I can say is I don't know when was the last time that I went to an ATM, to join in and to withdraw money, because everything right from shopping for vegetables to getting food delivered online, and through making any kind of a payment, we are not using any cash as of now. With respect to the regulations that the government has also set for small or medium or large scale organizations. So without further ado, let me just invite Mr. Sunil Kumar to take away this amazing session from us. Uh, and I think Mr. Murli will be joining us shortly. He's facing some technical issues. Sir, please take away this amazing session away.
Yeah, thank you very much, Sandeep, and very good afternoon to the audience as well as my fellow panelists, Mr. Rashikant, as well as Mr. Murli, for this panel discussions, and welcome all of you on board. And first of all, I'm very thankful to the Universal Mentors Association for arranging this panel discussion and organizing the digital transformation of banking conclave of 2022. And as far as this panel is concerned, we have got a very interesting topic, future of neo-normal and digital payments. So just before starting the panel discussions, I would like to set the context because this topic is very interesting. And when any topics, when we discuss about future, it is better to know the background and the past and the present. So the past and present is the actually the background setting up for the future discussion. So that is where I feel that let us look into the payments in a very impartial way, the payment system how worked in India or in any of the countries to that extent. Because cash and non-cash payment, cash related payment, same way the cash like cash equivalent instruments could be there or instructions could be there. And traditionally, this is one of the mode for the public to settle their statutory obligations, contractual obligations, as well as to conduct the trade, whether purchase of goods and services or meeting any of their obligations to that extent. So for this, definitely the banks were actually playing a very key role because they are the movers of the funds across the public, and whether it is even if it is a cash or an instrument or a payment instruction to that extent. And banks were predominantly doing the settlement of uh, the payment obligations of the parties. This is very critical because a third party who is a trusted party who will undertake the transaction seamlessly. So that is where the entire trade and the payment obligations commitments are built and performed in its full sense. And over the years, there were lots of development happening. And number first of the development happened in this context is that as traditionally you will call it as a negotiable instrument. You need not take the cash, but the obligations are fast. And then the bankers can actually initiate or recognize, negotiate, and make the payments. Then came the payment instructions based on the transfers, like which is happening in the Swift context and all. So, to a certain extent, those payments were all settled through the general clearing houses. And you may all recall the days were 3 days, 7 days, or even 10 days or more took for the outstation checks to be cleared in the traditional clearing house mechanism and all. From there, lots of changes have been happened, and definitely we can say it is there is a positive government or a regulatory intervention to improvise this thing. The fundamental reason is that the settlement period, if it is extended beyond a particular period, naturally there will be a bankruptcy risk. So the shorter the settlement period, shorter the risks related to bankruptcy happening. So every time the central government, and that is where the netting related act, everything brought into place, and the government and the regulator has tried to make the smoothen the settlement part. And the regulator has created the National Payment Council of India, that is NPCI, who actually did a lot of innovations to that extent, like UPI payment, IMPS payment, and all, to digitize the payment and make it faster and make it through straight through processing. The same way from the bank side, under the regulatory umbrella, NEFT, RTGS type of payments for payment modes were generated, and that was also made, is now currently it is 24 hours like that. So that is the governmental interference part. And second thing, from the fintechs, when the fintechs from some 5 years or 6 years back, when the fintech disruption started, the fintechs came out with a lot of these product options, like the e-commerce platform, and a lot of digital payment apps which they have created has also revolutionized the field. The same way you can see the banks also have gone through a certain amount of innovation from their side, like digital payments have been made, then e-wallets, like that mechanism they have created. So the payment system was always transforming in this way to the positive extent. But the biggest change happened when the COVID happened, because till that time, whatever changes happened, whether in the settlement or the digital payment space, everything has been speeded up, because we lost the touch of face to face, whether it is a customer, whether within the family, and the patient and the doctor, customer, borrower and the banker, government and the public, the legislature and their supporters, politician and their the mass following. Everywhere the face to face interaction has been completely disrupted. And our country and many other countries went through the long lockdowns, which retained the people at home. And this is the context, actually, we need to completely virtualize our interactions. The virtualization of the interaction happened during the COVID period. And then that is where I believe that the neo normal started. Now we are living back to normalcy, because the COVID threat is reduced, but it is not completely out of the window. But still, the face to face has started. But still, the benefits and advantages what has been created during the lockdowns or during the pandemic period, we are actually continuing, we are actually improvising, and that is what created the neo normal. And two other factors I would like to mention before the COVID itself, the digital payment or payment revolution. Two things happened. One is from the regulatory and government side happening, the financial inclusion. For the financial inclusion, biggest challenges banks were facing when this the uh, uh, the rural area people, the population who were not having clear identity which can be recognized by the banking system. That there came the Aadhaar into play, which created a single documented identity, and now it is almost 90 to 95% of the Indian population is covered by this single identity document. Second thing, from the financial inclusion perspective, and the digital payment has been pushed. And then came in 3 4 years back the demonetization as well as the GST drive. These two governmental measures may be controversial in some angle or the other angle, but the fact of the matter is that it made the unorganized sector and the population, vast population in the different geographies in India, to come on the mainstream through financial inclusion and trying up with the digital payments. So that has been created the infrastructure for the further development. So this is the whole background where we are coming up, and I would like to stop here with this background. And now I think we can start the panel discussion. And first thing I would do the India's largest banker and the oldest banker and the biggest player in the market. I would like to, from the representative from the State Bank of India, Mr. Rishikant, to ask this question that before setting up the panel discussion, we need to have an idea what we mean by this neo-normal, how we see it. So according to you, what is the neo-normal in banking and payment space? I would like to have the views of Mr. Rishikant. Thank you. Over to you, Rishikant.
Thank you, sir. I guess the context was meticulously articulated, one of the best. Good afternoon, one and all. So yeah, before jumping directly to the new normal or digitization, let's analyze the present situation. Presently, most of the banking vertical is more or less bifurcated into two sections. If I high level bifurcation, physical and digital, physical branches and digital transformation through apps and online banking and internet banking. In physical branches, what we do, like, it's all about payments, cash, deposits, record keepings, maybe some repository services, so on and so forth. Going ahead, I guess all these functionalities of brick and mortar model of banking is going to convert it into three attributes. Those two attributes will be identity, information, and experience. These three attributes can be converted only with the help of latest technologies. So yeah, that's the need of an hour. We can't just go with the, sorry, I'm getting a call. So we can't go with the present channels or present model of functioning. People has already started migration work. Some of them has already achieved also. Some of them on the in progress activity. So as I said, we bifurcate majorly into two sections: physical and digital, something like that. So digital transformation, the people who are digitally native, they don't have any presence in physical form. We term it as a neo banks or neo fintechs or maybe something like that. So ideally, those players, their main intention is to appeal the tech savvy consumers who don't mind doing most of their money management through a mobile app. Okay, so in short, they are a little bit of having a good risk appetite. They need something at their fingertips and they believe in the convenience. Okay, so neo normal or neo banks or neo financial institutions or neo fintechs, those are the players who don't have the physical presence. In India also we have two three players, and most of the established players, they have now bifurcated their verticals, because again, as I said, that's a need of an hour. You can't go away with the digital transformation. That doesn't mean I have to just lay off or just go out with my physical presence, because somewhere banking is the space wherein physical touch point is still a mandatory. So bifurcation is necessary. Accordingly, the one vertical wherein we call it as phygital, physical plus digital, and then the other vertical to cater those tech savvy people who don't mind or who has that risk appetite to work only in the digital mode. So that vertical will be called as neo normal within the organization. So first category, I told you that they are the organizations or vertical which completely on neo. They don't believe in physical branches and all these things. The second category, a bigger chunk, I will say, which will compose of all the existing players within public sector, private sector, cooperative, maybe foreign sector, when they have carved niche territory, they call it as neo wherein they will serve all their functionality, all their needs in the online platform or digital platform. So that's submission, or that's the context, that's a brief description what I would try to make of neo norm.
Yeah, thanks, Mr. Rashikant, for that. Interestingly, you have put two ideas. Number one is that the entire thing in future is going to be based on three factors. One is identity, information, and ease of business, and these are the driving forces. And then what you have defined is that anything which is not physical is that what could be treated as neo. It is a digital. It can be having two places. Number one, everything started and now only the neo is there, that is the neo stream coming up. And second thing, even the physical for the niche clients, on every product has been offered, or every service has been offered in the digital world can also be treated as a neo. It's a good definition looking at the background and the brick and mortar size of the banking. Traditionally we were all engaging, and from there this transformation is happening, and this is the way actually it is evolving in the banking scene. As there will be, I think most of the banks might have created a department who will be only innovating the digital products, and all the traditional departments which is working in the physical mode, another mandate has come that you actually innovate from your side how you can digitize and offer all the shelf across the shelf products to the your customer side. Yeah, thanks for that views. Now I can just turn to Mr. Murli. And Ms. Murli, right now when we talk about the digital payment, there are multiple names which will come to you, or the modes will come to our mind, like UPI, IMPS, to whether it's NEFT, RTGS is one side, and it's coming from the Google Pay or the scan and pay type of all the modes of payment. All these are the digital modes now existing in this context. And do you think whether these payment modes at present what we are practicing is the actually the future, or at present, like, is it going to be improvised in that direction, or is it only a transitory phase and something big is coming, completely changing the whole scenario? What do you think about it, Mr. Murli? I think, Murli, we are unable to hear you. You are not on mute. Could you please check that? No, I don't think we are able to hear you. Sandeep, could your back team could render some help?
Am I audible now?
Yeah, now it is very clear, loud and clear. Please
Thank you.
continue.
Good afternoon. Digital always has a startup problem. Once it is on, then it's on forever. So your question is, are we in a transitory phase? What we are seeing at this point of time, is it going to last? This is very interesting. We are at the junction where um, we still issue checkbook and debit cards when anyone opened the account. So which means the first introduction to the world of transaction and payments always is going to start with a place where you will have a checkbook, where the reissuance rates have come down by 95%. That's the reality. So which means people have multiple mode of doing a transaction today. Let's just close the eyes and say, can I transact with a cash? Of course, yes. Can I transact with a check? Definitely yes. Can I do a P2M, that is merchant? Can I make the payment on an e-com or a physical terminal through a card? Yes. Can I do also digital transaction in form of either a QR code or payment? I can say payment gateways. Then you can get into Google Pay and all those PPIs who create as a payment interfaces. So the choice of an individual is wide range. So if you look into it, is digital here going to stay what we are doing it? Of course, yes. Now, what is going to make this entire journey different and more interesting is people will start choosing their modes. Like my friend Shastri said, that the risk appetite of an individual is directly proportional to the mode and the transaction pattern one decides to use. Okay, the one who is looking at low value transactions and then doing multiple transactions will get into UPI, or there are multiple options. Let's not name anything as a key thing, and you will have a digital ledger in the form of a digital savings account or a current account. So the transaction fees is decided by not only by the mode, by the transaction value. That is why if you go and see RTGS, NEFT or IMPS, all have multiple limits. These limits are actually, they can actually collapse and make it one platform. Then suddenly, this is categorized into, actually, if you go back to the basic thing, one who is doing an X amount, let him first go through the IMPS or let him go through the RTGS. So it's categorized and kept in a compartment, which will make convenience easier, one, and also velocity facilitator, which means the volume of transaction will decide the value of transaction, that is at the lowest end of digital. And if you go to the highest level, value of transaction will be high, volume will be lower, that you can get into RTGS of NEFT. So all these transactions are going to stay at this point of time, including cash. And we are living in an era where, if you go and see the statistics, people say UPI transactions have gone up. Then somebody says, which is a real, ATM transactions have gone up. Then if you go back and say cash in circulation has gone up, and so is the ATM transactions have gone up. So now what's happening is, in few of the lower end cases, where earlier I used to pay my servant maid, say 5,000 rupees as cash, today I'm doing a P2P transaction, and that P2P transaction, that servant maid is in a position to go to the ATM and take cash as and when needed, and also doing multiple transactions through the digital. So the velocity of money has definitely increased by 100 times. The form of money in hand has increased by multiple times, and the opportunities. So the next level is, today it is confined only to smartphones. So if you see UPI 123, what we are talking about, the expansionist mode, which is getting into non-smartphone, is going to be a revolution, in the sense that for the first time, you are going to look at the nook and corner, every corner of India, you can actually start doing transaction in a non-smartphone mode. The base of non-smartphone is today close to, say, 65 to 70%. So suddenly you are going to have an influx of people who are going to migrate themselves. So at this stage, two things which is clear and much needed is, one is digital awareness, how do we create, and then digital transaction platform, how robust we are going to make it. Because once so many people come in, then what happens is the entry point of credit card becomes buy now, pay later. And buy now, pay later is going to be the largest mode, in which every corner shop will start getting into the mode immaterial of value. So today payment is used for settlement. Today these payments will be going through non-smartphones. Third thing, this payment is going to expand the credit base, and through that, banking is going to be the biggest gainer, because the good set of buy now, pay later will migrate into a credit card, then they migrate into a personal loan or a business loan. So the value chain of loan movement is going to be significant, and this is going to be triggered for the first time by payment and transaction. So these modes will continue to coexist. One will overtake the other for a temporary period of time, but people, based on their value, will decide the volume, and in some cases, volume will decide the value.
Yeah, thanks, Murali, for that interesting topic. When you started that, with there will be checkbooks, and then they will be asking for the digital payments. Exactly, it is a resemblance to some. It was always a very curious situation for me. If you walk into any hotel in Tokyo, one side is a very advanced city and technologically very superior, but first they will say that you can't book a hotel room just going to the reception. You need to book online. So that is the first thing they will say. So, oh, everything is digital, we will think. But when you take the room in charge, there is no digital. You have a ledger book. You have to enter physically there. So that is what it's both the ways subsisting. Yes, that is a very interesting observation. You said that as all these modes are there, but it is as maybe possibly, I think, one way it is playing the financial inclusion part also, because those people who are technologically savvy and who have these smartphones and all, they are actually attempting all these new types, but at the same time the basic needs certain times to meet. And when the expansion, that is why the cash withdrawals are happening into the from the ATM counters and all. And one of the biggest thing is that India is basically a cash based economy, and that cash transactions are still happening. But then when we look at in this context, and just further take up your observation that both are subsisting. Do you believe this? Currently, it is true that it is subsisting, but in future also, let us look into next the 5 years bucket. Do you think that when the digital payment mode is also growing like this, the same way the other traditional modes will also subsist, or this thing can be, whether the digital payment mode has got the capacity to completely replace all these modes. What is your thinking process?
That's again a twist into the tail, because nothing fades out immediately. There is a phase of fading that happens in terms. See, if you see, when we moved from barter system to a leather currency to a paper currency to a digital currency. So to answer your question, when this will fade out totally is, assume government or a regulator comes out and say up to 5,000 or 10,000 rupees only digital transaction is permitted through digital currency, which means you have replaced the physical component of a currency with a digital currency with the equal promissory guarantees which sovereign gives it. Then suddenly what happens is the largest base, if you see the largest base which holds on payments and transactions is up to 5,000 or 10,000. So immediately it puts a pressure into the system that first 10,000 rupees of everyone's balance, immaterial of whether it's an entity or individual, will get transformed into digital mode, and that digital mode to digital mode transaction need to happen only in a digital scale, which can be through a PPI or can be a direct debit credit also between the banks. Then the dependency of cash will move out. Though through that, what will happen is ATM might die, but cash will not die, because you have said that in every account, the first 10,000 rupees, or it can decide, you can decide first 10,000 or 20,000 is always digital, and anything incremental about it only you are involving into a physical form. So then if you close your eyes and say, it's the same situation where I give my 5,000 rupees to my servant maid as any point of time. At every point of time, it is only in digital form, can be transacted only in digital form. So in a digital currency, the uniqueness is, if I issued you a 5,000 rupees digital currency, you can't go to withdraw physical currency out of that. So if we have to phase out, you have to have a threshold based methodology, and saying that minimum first limit of X value will always be in digital, and up to that value, it can be only digitally transacted. Then what happens? The entire ecosystem of retail in supply chain, let's close our eyes with ONDC coming in, which I'll try to cover it later. The last leg supplier, where absolute groceries and provision for majority is less than 2,000 or 3,000, or the vegetable vendor or the fruit vendor, everybody will start holding only digital currency, and everybody will start transacting in digital currency. So we need to have a system migration to facilitate that over a period of time. 10 years from now, I foresee these things happening.
Yeah, thanks. It is a quite interesting observation, and it's very quite, and I could say it's a very reasonable observation also. Yes, that the small portion of the is taking place in the digital, but it is a very wide network and wide space. But then slowly the other systems also. So in effect, what you are saying is that Mr. Shastikanta's signing of the currency note will continue at least for 10 years. So two more governors or may have to do that exercise of signing the currency notes. Yeah, thanks for that views. Now I will turn to Mr. Rishikant once again, as one of the biggest banks in India who has supporting the trade transactions to a great extent, export and import. How do you see? Because definitely we have seen in the domestic scene, yes, a lot of things have happened, and the digital payment is possible. Inclusion happened, whether it is you're from Kohima or Aizawl or it's from Chandigarh, anywhere, and any part, within minutes you can transmit the money or money value equivalent through any of these payment modes, and all are happening. But when you look at in a cross-border transaction, definitely there are two pieces coming about the exchange control regulatory regime. We will speak about it in the later part. But in the first part, when the cross-border transaction happening, whether that digital payment and the speed to that extent, because traditionally when we look at everything LC based and the SPLC based payment is, that is what the trust factor created in the context of the export and import. And that trust factor has not been completely removed. Of course, we have seen over the period the documentary credit related products and financing is coming down, but not to that a great extent. But at the same time, the growth on the other side means the non-documentary trade related the trade payment and transactions are happening. That is also increasing. But at the same time, as both are coexisting to a certain extent, because the other case, what is happening is in the non-documentary trade, the trust factor is dependent on mainly on the major supplier or a major purchaser, big corporate, whether it is Amazon or the Flipkarts or Zara group, because that credit worthiness is being taken by the bankers when extending the payment or credit to the supplier, the purchasers, as well as the vendors to that extent. Because when we do the suppliers finance or vendor finance to that extent and everything, when we do non-documentary trade related transaction, yes, definitely that trust factor has been substituted more by the big corporates who can to a certain extent say that AAA rated companies like that. So keeping both in view, do you expect that digitization or digital payment will be soon catching up in the cross-border context also, or will it be a more challenging scenarios for actually achieving the digital payments?
Well, with global economies becoming increasingly connected, there is growing demand for a fast, secure, and efficient cross-border payment systems. Now, the cross-border payment ecosystem includes not only B2B or P2B or B2P, but it also has a P2P segment also, and which contributes substantial percentage. Processing of cross-border remittance presently take place to various legacy channels such as SWIFT and corresponding banking, maybe postal, through RDA rupee drawing arrangements, MTSs, money transfer service schemes, etc. When it comes to corporate, as you already mentioned, that we already have the arrangement of trade finance, LCs and BGs of the world, and they have their own framework, own ecosystem according to the country of presence. Major hurdle as of now, what we seen is like transaction fees, and as you rightly mentioned, excessive regulatory and documentation requirements. And these last two sections make small value transactions unattractive when it comes to cross border payment. Okay, so when it comes to future, presently we'll address the challenges. What are the challenges of cross border payments? Whether it may be P2P or B2P, what it may be, what are the challenges? If we address those challenges, and how to address the challenges, of course, digitization. So challenges first, high cost. Cost is still at a higher range when it comes to cross border payments. Second, transaction is low. As I said some time back, need of an hour is everything is expected in the fingertips. So still, when it comes to cross-border payments, whether it may be a P2P segment or B2B segment, the space is still a slower one. There are security issues also, as I was saying that there is a need of an hour for digitization. All these things we have to adopt the digitization with the help of latest technologies. But then, on the other hand, the fraudsters are also envisaging these technologies, and they are also coming up with something called sophisticated attacks. So yeah, and the cross border payments are the first one vulnerable as compared to the domestic one, because it includes the currency in little bit of higher value also. Last but not the least, lack of transparency when it comes to cross border payments. There includes lack of transparency is also need of an hour. So they just a minute. Yeah. So as I said, there are the four challenges as of now. Four factors attributes: high cost, slow transaction, security issues, and lack of transparencies. And all these can be get rid with the use of digitization only. Okay. The examples, whether it is going to happen, it has already started actually. As a classic example is integration of UPI. The countries like Singapore and Thailand has already started implementing UPI ecosystem, which will more or less within at least vicinity of these three countries, seamless payment transfer between for a small bill transaction is going to happen sooner or later. So that is already started. Blockchain, as I said, my last challenging factor was lack of transparency. With the introduction of blockchain, I guess most of those transactions, including trade finance, what you mentioned, The documentation involved in trade finance, maybe everything can be onboarded on that blockchain channel. But yes, still a lot of work to be done, still a lot of maturity has to be attained. Many player has to come together to achieve that interoperability, and then those parameters can be ruled out. So yeah, to answer in one simple sentence, yes, that's huge scope in cross-border payments in context of digitization. And yeah, things are already started, and maybe things are not, that days are not back, that wherein you can witness that even cross-border payments, at least to start with small value transactions, it will be in a fingertips. Slowly and subsequently it will penetrate to business and trade finance also. That's
Yeah, very good, Mr. Rishikant. You have actually you have actually explained why in the trade context and what are the challenges, and definitely you are very hopeful, very positive. It is moving in the right direction, and definitely in future, definitely we will see the cross-border payment happening through the digital and the straight-through processing. But then you expect that it will all happen, start with these small value transactions, and then slowly the trust is built up, because the biggest four challenges you have identified is: one is cost is phenomenal, security threat, fraud threat, and transparency related challenges, trust factor. All these things are the real challenges what we are facing. And therefore definitely in the, at least in the trade space, it may take little more time, but there are definitely, as you recognize, and we can see that there are lots of experiment happening. Even when we talk about the LCs, there are digitization in the LCs happening, LC space, ELCs, and even there is a UCP has been modified to that extent to recognize electronic LCs, and the electronic payment and recognition and negotiation to that extent is one time happening. And we have seen, to address this fraud related and the transparency related, double financing related challenges, lots of trade platform. And I don't think in India, I think earlier I have interacted with one or two vendors, some of the banks have started looking into for the trade platforms like that, where the informations can be shared to that great extent. And of course in the international context, I have seen that there are various platforms where the documents are like it is working like our this SME the factoring like mechanism. It is actually working the platform, the documents are coming, so double financing can be maximum avoided. And to a great extent the acceptance is coming from both sides of the party. So it is definitely it is in a better situations we have seen it. But yes, of course there are a lot of things to happen to really happen the trade context, in the real sense, the digital payment and all the platform, and all those things needs to be developed, and the UCP is working on that. And another big challenges we have seen is that this the in the cross-border context, this vendor onboarding is really challenge. And then many of the payment related data, many of the countries, it is not India is alone, I think I have seen the Malaysia as well as Indonesia like countries also, this domestication of the data has been proposed, and even the European Union to a certain extent it is being done. So once that happens, then the biggest challenge would be this type of payment data being served in an outside location and all would be more challenging. So the challenges are more to that extent than the real scenario where we can speed up the things, particularly in the trade. But I think, Mr. Murali, I will now turn to you, because when we look at from the remittance of international context, mainly for when India is location where we have a lot of NRIs, and the Indian diaspora is there across the world in many parts, particularly in the Gulf regions and the European Union region, or whether it is Australia or Africa. So the remittance is one of the payment mode, and traditionally being all relied on the exchange houses, because these our mid-level workers or the blue collar employees were never using the banking system, because they have their own challenges, all through happening through the exchange houses. Do you see in the digitization context, and whether there are any other modes we can try to that extent that even the bankers can have a better system? Because the biggest challenge we are facing in an exchange house context, we are not very satisfied how much is their KYC, AML, and related the controls are working, and how many how much effective is this cash or Hawala related transactions these exchange houses are able to actually nullify the risk to that extent, and also the bankers movement and the some sort of a digital payment would be a better solution to that extent, and even the fintechs can also play a greater role. Do you see a different landscape in the context of the normal remittance happening for the small value between the residents and non-residents to that extent?
Yeah, slightly tricky question because this has multiple push-pull dynamics. See, if you see 180 currencies are there across the world. 180 officially recognized currencies which can be traded between countries, and unrecognized, leave the bitcoins and all out. Even otherwise, there will be another 30, 40. So, which means 200 plus currencies. Okay. And then 200 plus currencies means each country has pegged it against certain denominator currency to allow a forex conversion. So some will say dollar, some will say yen, some will say nothing. My ruble to rupee, you can do it straight, or like Iran. So there are multiple combinations. So permutation combinations here is abundance. So which means this makes not only regulatory comes later. The first, the value of that paper and the conversion of the paper by itself is stitched into, is it a single conversion, double conversion, or triple conversion? From some countries, you can't directly just convert. You will go to a base currency, from base currency to a convertible currency, from convertible currency to the currency in which you. So it is as complicated as that. And when you are doing single conversion or double conversion or multiple conversion, the intertwining regulations, okay, which means is double when you do a double conversion, if you have a double taxation treaty with that country, double conversion becomes far more easier. So again, here again a bottleneck, which means one has to come out with a comprehensive package by identifying pocket of excellence. For example, assume out of 180 countries, say Indian NRIs, let's take only target them, assume they are the only population left, and then we are going to create a solution. Identify those 30, 40, 50 countries, create a pipe which fulfills minimum criteria in terms of KYC, which means you will say if he is a visa holder, if he is holding an Indian passport, your KYC is over, then start doing remittance. Where this exchange house has stored, or scored everyone else in the earlier part, even today, is for a blue-collared worker to do a transaction, exchange house might slightly charge him more, but the pace in which and the intention in which they do for at least 95-96% of the population is phenomenally good. They operate within the guidelines, and these guidelines are given by the regulators only. It's not like they're not driven by guidelines. One or two bad apples happens there, of course. And in fact, you go back and see now most of the banks have tied up with exchange houses to do the remittance business too. It is not like banks in isolation or exchange houses in isolation. So there is a partnership already available. So how will you make that partnership seamless? Now, my friend was talking about Singapore. Yes, Singapore and India is going through the UPI, and UPI is one platform we can transport it or teleport it across the globe, because on either side you have a KYC requirement, and it is cross-checked while the data is being transferred or money is being transferred. And UPI has a unique ability of doing a cloud computing, which means you can actually segregate data in such a fashion that whatever data that is needed only can be preserved in the other country, and confidential data can be pushed back or pulled back depending upon what sort of a methodology you have. So UPI is one thing, and similarly government of Abu Dhabi, that is NPCI, has signed up with Abu Dhabi Monetary Fund, so wherein we are talking about integrating, because again here this is a contingent where we have a lot of Indians, entire Arab countries coming under NPCI umbrella and doing the seamless remittance. It will save two things. One is not only regulatory hurdles or cost, they can actually start transferring money like how we do it in India, which means there are no time zones nor the time. So I think UPI, we should identify in all the NRI pocket key ones and start getting into it. NPCI, again, expand it to the other segment. So no need to focus on 180 currency. I am sure that if we focus on 8 to 12 currencies using these two interfaces, and combining that with cloud computation with a clear segmentation of relevant data only to be parked on the other side, and other confidential data can be pushed to this side of our country. Because finally data is money, and data is the most riskiest thing we have to transfer. So which means we need to ensure that data transfer happens only at the relevant mode, or maybe like a CKYC. If he's doing a remittance from here, I'll give only a confirmation. Yes, the consumer on the other side and the receiver on this side is, so we can work out multiple methodology, OTP based methodology, CKYC. We can do multiple things, but it is possible if we take the pocket of excellence and selective route.
Yeah, thank you very much, Murali, for that very elaborate explanation and the way in which you have actually perceived that how the inter-remittance are currently taking place and how we can actually figure out in a better way in a certain context, looking at all these scenarios. And one is regulatory and the challenge between the convertibility. That is a fundamental problem coming up when we are expanding the jurisdictions. Yeah, before just proceeding further, Sandeep, how much time we will have further? 5 minutes or something, so we can.
No, sir. We just have a couple of more minutes. Actually,
Couple
our
of
other
minutes.
panelists.
Okay, then
Yeah.
I will just restrict my final question to the just a 1 minute answer or something from your side. I with Rashikant and Murali, the fundamental thing, how all this mechanism when the banks are working on the digital payment, we have a good partnership with the fintech. How do you see actually these fintechs? Because whether they are the partners or whether their disruption is compelling from us, or what exactly this relationship you would like to take it forward for the well-being or the right approach, whether the bank or the financial industry to take.
Uh, if I consider ecosystem as a whole, so interoperability is an answer. If I want to achieve the interoperability, there is nothing. I have to have my partner in place. I have to have stakeholders in place. But that's again, I'm considering ecosystem as a whole to one answer. But the second thing, which big players, so which means public and private players, they do consider that yeah, NPCI and all these people they are doing interoperability, but they are riding on the infrastructure of big players. A classic example of QR code ATM card. Now this Paytm and Amazon of the world, with their customer can come to ATM and withdraw the money, but whether they do have the ATM? No, they don't have anything. So infra will be us, and the riding parameter will be there. Of course, we are achieving that interoperability, so-called ecosystem as a whole, or maybe inclusion as a whole, but at the expense of infra. There are something called interchange fees and all these fees, but then that's not going to compensate. So regulatory has to be little careful. They have to consider this parameter via with interoperability, via with inclusion, but there has to be some substantiate factor to compensate the way we do in pharma sector for that copyrights and what you call patents and all these things. Some parameter has to be there, because they are riding on the infra of established players, and the beneficiaries are ecosystem as a whole. That's my final touch points. Thank you.
Yeah, thanks, Rishika. Just a one line question to Mr. Murali. Do you see the
We have
fintechs as, yeah, just last thing, do you think as a fintechs as a leader or a partner to the banking?
They are the best thing to happen for the society and banks, because
Yeah, I think some connectivity issue. I think we can hand over back to Sandeep. All back to
uh,
you. Thank you very much.
Thank you so much, sir. This was such a wonderful session where we had discussed, the new normal, where the digital payments are going to take us, within the country, transactions that are happening outside the country. Uh, Such a wonderful session. I would like to thank Sunil Kumar, sir, for joining us, for being such a wonderful moderator. I think even 1 hour wouldn't have been enough for this amazing session, and I think we should do a longer version of this particular topic on a very very large scale individually. Thank you, Mr. Shastri, for joining in, and Mr. Murli for sharing your wonderful views on this amazing topic. Stay tuned, ladies and gentlemen. We are joining us in about a couple of minutes, where we'll be talking about how fintech is shaping up the digital lending landscape. uh, Within the next 2 minutes. We'll be right back. Thank you so much, sir. Have a wonderful one.
Thank you, Sandeep, and thank you,
Thank you so
Universal
much.
Affairs Association.